If there's anything I like as much as the stock market, it's real estate. When you combine real estate with the stock market, you get a REIT, or a real estate investment trust. And one of my favorite REITs is Digital Realty Trust Inc., or DLR. DLR is at the heart of the internet with support for data centers, co-location, and interconnection strategies of customers across the world, ranging from cloud and information technology services, communications and social networking, to financial services, manufacturing, energy, healthcare, and consumer products. DLR owns properties around the world in 14 countries and boasts over 210 operating data centers. So, let's take a look. Digital Realty Trust has had a pretty favorable run when it comes to the market performance. The 1 year high price for the company's stock is recorded at $138.46 per share, with the lowest value at $110.84 per share. Currently, we're near the top of that range. During the past month, 11 analysts gave Digital Realty a buy rating. Two of the analysts branded the stock an overweight, and 8 analysts were recommending to hold. There were no underweight or sell ratings. Fourth quarter earnings were recently reported at $1.62 per share. As such, DLR has no problem maintaining its dividend payments. DLR's current dividend is about 3.4%. The payout ratio, which compares the quarterly dividend payment to the quarterly earnings, is 66.7%, indicating that the company can easily sustain the dividend given current income levels. DLR has raised its dividend payment in each of the last 3 years. The average price target is $137 per share, which implies only a small premium from the current share price. However, I like data centers since there is great occupancy levels and the tenants tend to be big companies that pay their rent on time. Besides, the charts are indicating to me more upside. So let's take a look at our charts. So we're looking at a monthly chart on Digital Realty Trust, and the symbol is DLR. For disclosure purposes, I do own shares of DLR, and I just acquired those shares today, Tuesday, toward the end of the day. Now, I want to show you something here that we've seen before when we saw it in Berkshire Hathaway, and that's one of the reasons that I was interested in Berkshire Hathaway. But from this point here in 2009 all the way up to the current time frame, we have a pretty decent move on up like that. Now, notice in the last, say, 2 years or so, we have a channel moving up like that. Now, this upward moving channel is very interesting because it's a divergence in comparison to the MAC. You see that the MAC topped here. It attempted the bottom here at this level. We're getting a second chance now with the coronavirus scare. So that bottom here extends for this year, and I'm thinking that it's going to head on up here. Now, if we want to take a look at it, let's take a look here at a few examples I want to show you. There's a top, there's a bottom. There's a top, there's a bottom. And again, here's a top, and again, here's the bottom. This is the important part that Berkshire also resembles. So we take a look at the price chart. That was the top, that was the bottom. Nice. Top, bottom. But when we get to here, this was the top, and this is the bottom. So we're basically going just sideways to slightly down. Here, this was a moderate decline, and this was a little bit steeper decline. But this decline is very shallow, whereas the decline in the MAC, that was a normal decline, heading on down like that, just like any of these as well. So that divergence, plus the fact that we're well above that zero line, tells me once this fast line moves back through the slow line on the upside, if it does, and I think it will, we're going to be bottoming and we're going to be heading up pretty fast. Looking at the histogram, you can see the same thing. We've been moving up each time. Now, we're not done perhaps on the downside, but I think we're pretty close. Nice move on up. Here in the price rate of change says we're done. We're bottoming and we're heading on up. Same thing for the RSI. Weakest point was back there, heading on up. Same thing with the stochastics. Volume looks fine. And then the Williams also. Maximum negativity in early 2018, heading on up. So a lot of those charts or oscillators are showing a divergence between the price chart. So even though the expectations are for the stock to move up to a price target of $137, I think it's going to blow past that. And I've got time. And I'm not too afraid of going into the market to buy something that I think has good upside. So that's what I did. Bought my shares today, Tuesday. You're going to be viewing this on Wednesday, hopefully. So for today, that's ChewDog Charts. Thank you.